Well, on the first day of the fall session of Parliament, the Liberals have announced changes to mortgage rules. All first-time home buyers will soon be eligible for a 30-year mortgage.
This really is about fairness for every generation. It's about making that first home more available for young Canadians, for first-time home buyers.
It expands the 30-year amortization to include first-time buyers for any type of home, as well as anybody buying a newly built home. The Liberal government is also raising the level for insured mortgages, moving it from $1 million to $1.5 million. It will allow more people to qualify for a mortgage with a down payment of less than 20%. The changes take effect on December 15th. All right, let's bring in Rubina Ahmed-Haq. She is a personal finance columnist joining us from Oakville. Rubina, great to see you.
Great to see you too, Angie.
So, a lot of people are kind of trying to mull over the numbers here, what works for them, what doesn't. So these changes announced by the federal government, let's first start off with what it means for first-time home buyers.
So it gives first-time home buyers more choice, especially those who are going into an insured mortgage, those with less than 20% down. They can now choose to go into a 30-year amortization. And so what that essentially means is those individuals who have been struggling to figure out how they're going to make those monthly payments, those payments would now be lower because they would be stretched over 30 years rather than 25 years, and might give them that little bit of extra room that they need to get into their first real estate property.
So everyone's going to sort of say that this makes sound sense. It looks good on paper, but if you can pull away the layers for us a little bit on this, and we're always sort of looking at the impact with the market, what kind of impact do you think the changes will now have on the housing market, as of course real estate agents and whatnot, buyers and sellers are going to be looking at things very closely?
So definitely this gives more people more ability to purchase more of a home, and so that could push prices up. You also have to, as the buyer, as the person purchasing the home and going into a 30-year mortgage, realize that you will, if you decide to stay on that 30-year amortization track, pay more interest for that same loan over that 30 years than you would pay if you were in a 25-year mortgage.
Right.
And so that means that you are going to take longer to get that home to be paid off. So those are things to consider. So it could definitely stoke prices and make it even more unavailable for young people who have been struggling in this market to afford a home.
And yet, of course, the government coming under fire for the high cost of homes, young people getting priced out, the lack of homes. So is this actually going to alleviate those problems, or could we be bringing in other issues here as we look long term?
I think short term, we may see a little bit of a blip in the price of homes. In some cases, in places like Vancouver and Toronto specifically, there is really not much room for prices to rise any further, because even those who are going into their second property, who have considerable equity in their home, they're finding it hard to make that leap because home prices have come up so much. So you can't just constantly expect that prices are going to continue to rise, because at one point, people won't be able to afford to buy those homes, regardless of whether you're a first-time buyer or someone who's upsizing or downsizing. It doesn't really make a difference. Mm-hmm. So prices may see a little bit of a blip, especially in places that have been more depressed. So outside of those major centers, you may see some people say, hey, now I can afford to move to a suburb outside of Vancouver, outside of Toronto, mm-hmm. and come into remote work once or twice a week. That's where I think we're going to see those price pressures mostly.
And then in terms of now tackling the current housing prices, we've talked about the lack of homes, the lack of affordability. If it's going to sort of be able to sort of make things a little bit more affordable, what about on the flip side to say, well, there still needs to be more homes available?
That is the major story, is that there's just simply not supply and too much demand. And there's many new Canadians in Canada that are also looking for places to rent or to buy. And both of those things have become completely unaffordable. So the government, I applaud them for making it easier, making a cash flow situation easier for especially young people when they're first buying their home, because later down the line, when their finances change, they can do lump sum payments, they can accelerate their payments. They don't have to stay on that 30-year 30-year amortization track. But the fact is that you still have to have a physical home to buy. And now a lot of young people have moved further and further out of the city. But as you know, companies are asking those individuals to come in more and more. That hybrid model that we thought was going to be, 1 day in the office has now become 3 days in the office. And so people are now flocking back into big cities and finding it completely unaffordable and living in smaller places, living in places where are not ideal for their family. And so it's the supply issue that needs to be tackled.
So having said all of that, what are you watching long term? We always keep an eye on what the Bank of Canada is doing. We always look at sort of see where, is it fixed or is it variable mortgage rates that one should be going for? What are you watching for right now, Rubina?
So definitely the next two announcements from the Bank of Canada, the expectation is they'll cut rates again by 25 basis points. By the middle of 2025, interest rates, the overnight rate specifically, is supposed to be under 3% according to forecasters. So that will mean that money will become more available, a little bit more affordable. But again, that is going to put pressure upwards on prices. And so yes, money may become cheaper, but that home that maybe you saw for $800,000 is now $1 million. That's $200,000 more that you have to come up with to afford it.
Yeah, a lot to balance out here as we sort of watch things as those numbers navigate through. Rubina, great to have you on this to break it all down. Rubina Ahmed is a personal finance columnist. Rubina, thanks again.
Thanks for having me.